Hello everyone, welcome back to the channel. Your credit score affects more than just your ability to get a credit card. It plays a role in your loan approvals, your interest rates, and even things like renting an apartment. But how does your credit score actually work, and how can you make it better? That's what we're going to be covering today. I am so happy to have you here with me today. Let's get started. Your credit score is a number between 300 and 850 that shows how responsible you are with credit. The higher your score, the better you look to lenders. And generally, a score of 670 or above is considered to be good, 740 and up is very good, and 800 or higher is excellent. And here's why it matters. A better credit score can save you thousands of dollars. You'll qualify for lower interest rates on things like mortgages, car loans, and credit cards. And you may even get better rates on your insurance. And over time, these savings can really add up. Now let's take a look at what goes into your credit score. Number one is payment history. This accounts for about 35% of your score. And this is the single most important factor. Late or missed payments stay on your credit report for up to 7 years. So you definitely want to make sure to make every payment on time. And I would encourage you to automate this if you can. Number two, credit utilization. This accounts for 30% of your score. And this is the percentage of your available credit that you have available to spend. Keeping your utilization below 30% shows lenders that you're not overextended. For example, if your credit limit is $10,000, try to keep your balance below $3,000. The lower your utilization, the better for your credit score. Ideally under 10% if you can swing it. Credit history is number three, and this accounts for 15% of your credit score. The longer you've had credit, the better. That's why it's often smart to keep older accounts open, even if you're not using them regularly. Number four is your credit mix. This accounts for 10% of your credit score. Lenders like to see a variety of different types of credit. So credit cards, auto loans, and mortgages is the mix that you might typically see on someone's credit report. And this shows that you can manage different forms of debt responsibly. Number five is new credit, and this accounts for 10% of your score as well. Opening several new accounts in a short time can temporarily drop your score, and this is partially due to hard inquiries, which happen when lenders check your credit for approval. Now, these, unlike soft inquiries like checking your own score, hard inquiries can lower your score by a few points and typically stay on your credit report for up to 12 months, though the impact usually fades after about 6. Now, if you want to boost your score fast, I would focus on paying down your balances and, of course, never missing a payment. These two areas have the biggest impact and can drive meaningful improvements fairly quickly. Now, how do you check your credit score or your credit report? Now, there are three major credit bureaus. You have Equifax, Experian, and TransUnion. And you can request a free copy of your credit report from each of these once per year at annualcreditreport.com. Now, many banks and credit card companies also provide your credit score right inside their app. And tools like Credit Karma, Rocket Money, for example, offer free access to your score, plus monitoring tools to track your changes over time. I want you to be sure to review your credit reports regularly. Look for errors like accounts you don't recognize or incorrect balances. And if you find anything wrong, be sure to dispute it immediately. And that's going to do it for today's video. A quick Mindful Money Minute about credit scores and how you can take the best advantage of it. If this helped you, why don't you drop a comment below? And if you haven't already, please like this video, subscribe to the channel, and hit that notification bell so that you don't miss out on the next video. I want to thank you so much for watching. And as always, I encourage you to dream big, to live well, and do great things. And I look forward to seeing you in the next video.